bad news, which could be possibly some good news. So last week's workshop didn't get recorded. So that's the bad news. I guess the good news is that I could cover last week's topics again, which I'd say in the most part, what we covered last week was the OCO order sets, which is probably the more sophisticated part of BlackBird. And, so I can cover that again if you guys would like. And what I'm going to do is I'm going to bring up the web page for that just so you guys know exactly what I'm talking about here. So from the menu here, I'm going to go to the order settings section here. Right, so this page simply kind of shows how the order settings window is broken into 3 sections. And so last week we talked about the OCO order sets section here, right? So this is where you actually define how your orders are going to behave, right? So you define whether you're going to be entering as a market order, limit order, right? That's where you set your profit target and your stop losses. So let me just kind of do a general check with you guys. Would you like me to cover this section again this week, or would you guys like this to be just an open Q&A session? All right, I'm getting a lot of people asking to cover the OCO again. All right. Okay, sounds good. All right, we'll do this again here. Okay, let me, actually, not the ES. Let's jump to the oil chart and we'll get BlackBird turned on here. And, all right, let's enable our strategy and get it going. All right, let's see. Okay, so we got BlackBird on here. And let's see. Before I get kind of started here, I'm going to just kind of wet your whistle here. I'll give you guys a little heads up on some things we're working on. So hopefully in 3 weeks' time, right, I should be back in my back home again in 3 weeks, and I'm really hoping that if everything goes perfectly well, we'll push out another update shortly after I get back in 3 weeks. And one of the cool things that we're going to add is we're going to add a new order type in here. It's not a new order type, but it's an automated order type. And so we've got another third-party NinjaTrader vendor out there that wants to partner with us, and their indicator has some issues. Well, it doesn't have issues, but their indicator it gives you a entry price, but you don't know if it's going to be a limit entry price or if it's going to be a stop entry price. All right, so in other words, if it's a long trade signal, you don't know if the entry price is going to be above the market where it would need to be a stop entry, or if the entry price is below the market where it needs to be a limit order. So we're going to come up with what we're going to call it a smart order entry. So basically BlackBird will automatically determine if the order needs to be a limit or a stop, depending if the price, whatever the price that the indicator tells BlackBird, to enter at, BlackBird, will decide if it needs to be a stop entry or a limit entry automatically for you. That's one of the updates we're hoping to get done. And if things go really well, we're going to have a setting in here for Forex traders to help get around this weird little NinjaTrader quirk where sometimes you had to put in 1,000 contracts, to get your backtest results correct. But in live trading, you only put in one contract. There's that flip-flopping back and forth between one contract versus 1,000 contracts or 10,000 contracts, depending on the lot size you're trading with Forex. So, so hopefully we can get a new option in there to make it easier for Forex traders, to kind of get the correct results. And let's see, what else was there? There were just kind of some other minor little internal stuff that we're going to do to BlackBird as well. But anyways, let's see, RJ is asking, auto switching between limit and market? No, RJ, it'd be auto switching between limit and a stop. Right, so I'm not sure how you would auto switch between a limit and a market. I'm not sure what would determine one or the other, but definitely I guess just to kind of explain, right? If you're using an indicator to set your entry price into the market, if let's see, I guess I gotta cancel this out. So, let's say your indicator says, okay, you need to go long up here at 50.20. Well, that would be a stop entry order because this is above the market right now as a long order. So that would be a stop entry. But if your indicator said, you know what, we need to go long down here at 50.10, well, that's a limit order because the price needs to come down and touch you to fill you to go long. So that's going to be the auto order type. It will be a stop versus a market. A stop versus a limit. So, okay. And let's see, what about market if touched? Ninja 7 does not support that. So BlackBird for Ninja 7 won't support that either. Ninja 8 has that built in as a order type. So once we convert BlackBird over to Ninja 8, then we'll incorporate the market if touch. But yeah, currently market if touched is not supported by NinjaTrader 7. So, all right. Let's see. All right. Well, with that, guys, I guess let's officially get this started. All right. So, I'm kind of wondering if I should do a comparison to an ATM, but no, I don't want to do that. I think that'll just add confusion here. Okay, so the OCO order sets. Let me kind of briefly describe, what is a OCO. And so I'll bring up the web page here. All right, so OCO stands for one cancels other. All right, so if you're using a NinjaTrader ATM strategy, and if you're using a profit target and a stop loss together, this profit target and stop loss are grouped or attached to each other as a OCO order set, right? So once again, OCO is one cancels other. So what that means is if your profit target is hit, then your stop loss gets canceled, right? So one would be the profit target gets filled, and then you cancel the other. So that means your stop loss gets canceled. And that's done by the exchange. So an OCO order set is actually an exchange type of order. So that happens at the exchange automatically for you. So, this is not anything special that NinjaTrader's doing. This all resides at the exchanges. It is possible that you could submit a separate profit target and a separate stop loss, and they're not an OCO set, which would mean if your profit target got hit, then your stop loss could still be hanging out there as an order waiting to get executed. And that could inadvertently reverse your position to the opposite direction, which most traders don't want that to happen. I'd say 95%, at least over 90% of traders are probably trading with an OCO set, especially day traders. Right, they're trading with an OCO set. That fits the vast majority of traders. So when you are setting up your orders, they're always set up as an OCO order set, right? And so that mimics NinjaTrader's ATM strategy. So, all right. So when you're setting up your order set, the first thing you have to figure out or decide is what type of an entry order do you want, right? So your entry order is the first thing that you have to define, right? So is it going to be a market, a limit, or are you using a stop entry or even a stop limit entry? So a stop entry would be a stop market entry, which a stop entry is similar to a market if touched. However, it's only on one side of the market, right? So a stop entry is similar to a market if touched, right? But the NinjaTrader 7 does not have limit market if touched orders, right? So, all right. So let's I'll just go with the market order for now. And okay, so we can see at the top here, we have our entry order type defined at the top, and we can see our profit target is going to be the next one down. And so we could just select a simple 10 tick for now. And then the order at the bottom is going to be your stop loss. And I'll just do a 10 tick stop loss as well. So now, just to iterate again, the OCO part of this is the bottom two orders, right? Your profit target and your stop loss is the OCO set, part of the OCO set. That is what's OCO'd together, I guess you could say. All right, so and let's see, take a look at the X's here. You notice the bottom two orders are black. So if you hit one of the black X's, that just cancels that part of the whole order set. Right? If you click the red X, that cancels the whole thing. So if I click that, basically it removes the whole set. It's going to delete the whole set there. You'll notice that it's also common over here. Right, you'll notice that these are red X's, so that means it's going to remove the whole trade signal. Right, so we have black X's that just remove the individual component, and the red X's remove the whole set, I guess you could call it. And also, if we hit the red X, that whole signal is deleted. Hit the red X, the whole signal is deleted. So hit the red X and the whole order set is deleted. Okay. And then, all right, so once you kind of have your market, your entry order type defined, then the next thing you can do is set the number of contracts. So there you go, it's the number of contracts right there. And the next thing is a name. So A, you can see A is a name. I can put in here a custom name. So let's say, for example, let's say I'm trading 2 lots here. All right, so all I'm going to do is do a copy from A. And right, so I have set A and set B. Right, if you're familiar with using a NinjaTrader ATM, the ATMs allow you to do 3 order sets. Right, so you can have A, B, and C with a NinjaTrader order set. With BlackBird, you can go beyond that. You can basically create as many order sets as you wish. You can just keep on going. I think we did build in some kind of limitation, probably something like 10. Can't imagine anybody needing more than 10 order sets. But that, so that's far beyond what, the average trader would ever need. So, but getting back to the name here, right? So A and B, that's the name of the order set. So let's say you're trading a 2 contract, and it's pretty common that a lot of people like their last order set to be a runner, right? So we would delete the profit target and just use the trailing stop loss as a runner. So I could actually go in here and use a trailing stop loss as a runner. And then with the name part, I can go in here and type in a new name for that order set. I could type in runner. So now you can see we have set A and runner. And so if I didn't like the name A, I could just go in here and type in, quick profit target, quick PT. So I can put a custom name in there. So these names can be handy in several places. So for example, right, when you see the order names show up on the chart, right, you'll see these names show up on the chart. And also I gotta close out that window. In the log tab, right? So in the log tab, BlackBird gives lots of feedback in the log tab as to various things that are happening here. Also, something that you guys may not be familiar with, but if we go to Tools, so from Ninja's Control Center, if you go to Tools and you go to Output Window, right? NinjaTrader has this Output window, which is basically like a feedback window. So, programmers can output all kinds of any information they want to this output window. A indicator can write to this output window, and so can your strategies. And so what we have done is BlackBird will output all kinds of information to this output window to help you understand, why orders are moving around and why orders may be moving or why orders may not be moving. So this becomes helpful when you're creating a really advanced order sets, and especially like when you get into the trailing actions here. When you start defining a lot of trailing action rules, at that point it can be kind of difficult keeping straight in your head or understanding in your head why a stop loss may be moving or why it may not be moving, and so this output window tells you, it just kind of gives you all kinds of information as to which trailing rules are being executed and which ones are not being executed and things like that. Right. So, naming your order sets, also shows up in the output window as well. And it just kind of helps you keep track of, exactly which profit target, is being moved. Because you can see right now, the stop losses have the same name, right? They're both called stop loss minus 10 ticks. And so if I go in here and say my runner has a different trailing action versus my quick PT stop loss, my quick PT stop loss could have a different trailing action. But if you leave the names the same, then when you're looking at the output window, if you're looking at the chart, you won't know which stop loss is which. You won't know, is it my quick PT or is it my runner stop loss that's that I'm looking that I'm reading about in the output window. So, but quite often the OCO name will be accompanied with the individual order name, so that'll kind of help you figure out which stop loss is which, but just by seeing which OCO order name you're using there. So, and let's see, it looks like I got a question here. Let's see. RJ is asking, can T2 read the moving average? So RJ, what would T2 be? I'm not sure what you mean by T2. So I'll wait for that response here. Okay. All right, yeah, RJ, I'll save your question for the open Q&A part. Okay. All right, so that was the name we just covered there. Let's see. All right, the next part would be getting into the trade fit section here. All right, so let's cancel that, and I'll remove that custom name, and there we go. And let's see, it should go back to A. All right, I'll just put A in there. Okay, so let's kind of cover some of these other options down here. So you'll notice when I click on the name, these options come up here. So you'll notice this says, right, the first section here, it's titled Trade Fit. Right, so the Trade Fit, those sections are designed to adjust the number of contracts based on various kind of money management rules that you might have in place. All right, so you see this has a trade fit. And if we also go up to money management, there is a trade fit right here, down below here. We can have a risk per trade. And so to kind of keep things simple, I'll put it on a fixed amount, right? And let's just increase this to 500, like so. And right, and so with that trade fit, there's also in the OCO order set, this trade fit, as the name implies, you can allow the number of contracts to increase or allow the number of contracts to decrease for downscaling or upscaling. So let's kind of put in something a little more reasonable. Let's say we're trading, let's do 5 contracts there. And so we can set limits to to the maximum number of contracts that can be upscaled to. So you can see right now it's defaulting to 10. And actually downscaling is defaulting to 10 as well. So let me just increase up to 11 here. So you can see the default upscaling and downscaling is set to 10. So the maximum number of contracts that BlackBird can upscale to is 21, and the minimum number of contracts that BlackBird can downscale is down to 1. Now we can go in and adjust this. So you can see we have an acceptable variance. So let's say if we don't want to increase, let's say we want our maximum number of contracts to be set no more than 5 additional contracts. We could set this down to 5. And so now BlackBird would be allowed to upscale to a maximum of 16 contracts. And let's say we wanted to trade at least a minimum of 3 contracts. So we could set the variance down to 8, and so now we could downscale. BlackBird can set a minimum of 3 contracts when it's downscaling. And then one of the other options here is this slider. So this slider, basically it's designed to tell BlackBird which OCO order set to start upscaling or downscaling first. Right? So these sliders really only come into play when we have multiple order sets. So let's just let's see here. I'll adjust the number of contracts. So all right, let's say we want to trade 10 lots here. So 7 of them would just want a quick profit target, and then 3 of them, we want 3 of them to be our runner here. Right, 3 of them we want to be our runner. And let's say you think that your runners are more important than your quick quick profit target here. So if your runners are more important, then what we could do is, for the downscaling, we could set the slider to rigid. So that means it makes it more difficult for BlackBird to reduce the number of runner contracts than it would order set A. So order set A is set to flexible. So BlackBird has more freedom to reduce the number of contracts in set A than it does in our runner set. All right, so flexible means it's easier to change the number of contracts, and rigid means it's more difficult to change the number of contracts. All right, so so our upscaling is set to flexible, and our downscaling is set to flexible as well. And then with our runner, let's say we really pretty much want to keep our runner as close to 3 contracts as possible. So our upscaling, we could set that to rigid. And then the downscaling is also set to rigid. So both upscaling and downscaling, they're both set to rigid. And then I could also set a limit here. So I could set some limits as well to the runner. So let's say, we don't want BlackBird to change the number of contracts for our runners. So we say, so we'll allow BlackBird to downscale the number of contracts down to 2 and only upscale to a maximum of 5 contracts, right? So we've set some limitations for BlackBird. So our runner contracts can only vary between 2 to 5 contracts there, right? So we set some constraints that BlackBird has to follow, that BlackBird will fall into. And at the same time, we set the trade fit scale here to rigid. So what that's going to do is BlackBird is going to adjust order set A very easily. It'll adjust order set A first, and then it'll start adjusting our runners last afterwards. But also we can see that with order set A, we've allowed BlackBird to reduce the number of contracts all the way down to 0 here. So we could go in and adjust that too. So let's say, let's set our variance down to 5. So basically, we've told BlackBird, we need at least 2 contracts in set A. So minimum of 2 contracts in set A, but we could increase the number of contracts all the way up to 12 as well, So 5 plus 7 gives you 12 there. So, and, just to kind of illustrate what this trade fit affects, what the trade fit affects, say that 10 times fast. So what the trade fit, what these trade fit parameters, what they affect here is the dynamic planner. So our dynamic planner is down here. So when you're using the dynamic planner, if you guys recall from the training webinar, let me just, I'll just run through this again here. So let's do this, and actually let's reverse this so we can see the number of contracts here. All right, so let's play around with our stop loss here. So we can see we got 2 stop losses sitting on top of each other, right? So you'll notice that there's 2 numbers here. In white, that's the total number of contracts for both order sets. And if I grab one, move it down, and hold on a moment. Let's adjust that again. There we go. So we can see that for order set A, so if you look at the names in the flags, the OCO order set name is on the right edge here. So you can see this stop loss is called a runner. It has the runner in the name. This one has A in the name. And so you can see that the number of contracts is constantly adjusting as price moves towards the stop loss or moves away from the stop loss, because our risk is changing as well. So just to kind of show you what's helping these, what's another part of the equation as to what's adjusting the number of contracts here is back in money management. So I'm going to use this button down here, the money management button. So remember, I set my risk per trade to $500. Right, so BlackBird can increase my risk to a maximum of $500. And I can take a look at my risk reward here. So there's a chart panel that shows you your risk reward, right? It's in the same area as your market info. I can just click on the risk reward tab. You'll see that there's two tabs there. Just like the panel down below, there's two tabs, right? There's a settings tab and there's a dynamic planner tab. So if we look at our risk, and I can click on this window here, and it'll toggle between units here, so it can show me my risk in ticks, it can show me my risk in points, or it can show me my risk in dollar amounts. And so as price gets closer to my stop losses or further away, right, that changes my risk. And so as the risk changes, basically BlackBird is going to try to increase my risk as close to $500 as possible, but it will not go over $500 because that's my maximum risk. And so BlackBird will adjust the number of contracts in my OCO order sets, right, to set a risk of $500. And since the market has moved away from my stop losses, right, my risk is the risk has increased a lot. So I'll need to pull my stop losses a little closer, and let's pull the other one a little closer. There we go. Now, so if we look at the number of contracts, and let's see here, I need to move my profit target down here a little bit. There we go. Actually, probably the best thing to do here is just turn off the dynamic planner and reset it again. There we go. So, all right, yeah, as price moves around too much, sometimes it's better just to shut your dynamic planner off and turn it back on, just to get your profit target and stop loss kind of within the same area, wherever the market has moved to there. And yeah, so now we can see the number of contracts adjusting for us automatically, and we can take a look at our risk there as well. We can see how the risk is updating. Right, the risk is increasing and decreasing automatically as BlackBird is updating the number of contracts. And basically, if price moves too far away, then it's going to set both order set A and our runner down to 0 contracts. All right, I didn't want to get too far into the dynamic planner, but I just wanted to really illustrate, what the trade fit is for. So yeah, that's what the trade fit's for, is for the dynamic planner, right? So you'll notice in the dynamic planner we have this scale to fit button. So the scale to fit, that is what is activating the automatic contract sizing feature. There is this scale to fit button. All right, so let's get back into the order settings. And now we have another section down here, a placement safeguard. So, a lot of unknown issues can occur when you're using indicators to set stuff, right? So you can use an indicator to set your stop loss, right? To set the price for your stop loss, you can use an indicator, right? So if you're using an indicator, these indicators could calculate prices that kind of violate your trading rules. How you would want to trade, as a person. Let's say you have some stop loss kind of trading guidelines, but you want to use an indicator. That indicator could violate, your stop loss guidelines, right? In other words, it could throw your stop loss, way too far away from price. It could move your stop loss too far out, or it could pull your stop loss in too close to price as well, getting you stopped out easily. Those are kind of the, inherent unknowns when you're using an indicator to set stop losses. You could even use an indicator to set your profit target. So if you're using an indicator, then you have these placement safeguards that could come into effect. So, there's a couple of, basically there's really only two things you can do if your safeguards get violated, right? So if an indicator is trying to push your stop loss out too far, you've got two choices to make. Either you can just skip the trade, just not take the trade at all, or you can constrain your stop loss or even profit target. All right, so you can constrain it. So, in other words, let's say we, in our trading, we'll allow for a maximum stop loss of 20 ticks and a minimum stop loss of 10 ticks. All right, so for trading oil, oil is pretty volatile, I'd say. And so, you may not want your stop loss to be, placed within 10 ticks of the market. Okay. So now these are placement safeguards. So, right. So these safeguards only take place for the initial placement of the order. Right, only the initial placement of the order. So if we take a look at an order, we have an initial placement, right? So in other words, basically we set our stop loss at a 10 tick stop loss. That's our initial placement. And then we could set up some trailing rules, right? And our trailing rules could create a stop loss bigger than 10 ticks or even tighter than 10 ticks. But the safeguards only apply to this initial placement, to the placement here. Right? So that's why this is titled a placement safeguards. Right? So once the order has been placed, within these safeguard distances, within these constraints here, then your trailing rules can take over and do whatever they want. So your trailing rules are not constrained by these safeguards, right? It's only the initial placement. So, right. So, so if you have this mode set to skip trades, then obviously you're just skipping the whole trade, and your order set does not get placed. So therefore, trailing rules would never kick in because you don't have an order that ever got executed. So, and also when you're if you're choosing constrain, so if you want to constrain your profit target and your stop loss, then you also have a new option here that says enforce max constraints after placement, right? So after the placement, right? So once again, these constraints initially they only apply to the placement, to the initial placement, right? So they're only going to apply to this initial placement rule here. So you can see a profit target has an initial placement, right? You have to tell BlackBird, where to set your profit target once your order gets filled. And of course, your stop loss also has a initial placement. And then once the initial placement takes place, afterwards, then your trailing rules can move stuff around anywhere it wants, right? So if you're constraining your orders, so let's set something up reasonable here. Let's say, again, we want a minimum of a 10 tick profit target, and let's say a maximum of a 50 tick profit target. All right, so we got some constraints set up here. Now, right, so these are just constraints. So these constraints will override our initial placement for our profit target and stop loss. So that means that, so if you're constraining your orders, that means your order will actually get executed and placed, right? So then you have the option. So once your profit target and your stop loss are out there and working, then you have this option to keep enforcing these constraints, but it's only for the maximum constraint, right? You never want to enforce a minimum stop loss distance, right? Because otherwise your stop loss would never get hit, right? If we said, if we were enforcing this minimum stop loss distance of 10 ticks, right, that means your stop loss would constantly have to be placed 10 ticks away and your stop loss would never get hit, right? So that doesn't make sense. Same with your profit target, right? You need price to keep moving up and hitting your profit target. So the minimum distance between the market and your profit target is obviously it's going to go down to 0. So you never want to enforce a minimum profit target distance, right? So the minimum distances can't be enforced once the order is working. So the only thing that's enforced would be the maximum constraints, right? So let's just say, if you have some fancy stop loss trailing rules, and you want to make sure that your stop loss never gets moved away more than 20 ticks from price, then you can enforce this maximum distance here. Same thing with a profit target there as well. You can enforce a maximum profit target distance. So, and this maximum profit target distance, that's going to be the maximum distance from the entry price, right? So right, a stop loss, that the stop loss is always in relationship to where the current market price is, but your profit target, that's always in relationship to your entry price, right? Whatever price you got in, whatever price your order got filled at. So, all right, so I think we have that pretty well covered. So again, you can decide to either skip the trade or constrain your profit and stop loss targets. And you can mix and match stuff as well. So, let's say we're going to use constrain, and we'll turn all these options on here. And then for our runner, we could set our runner to skip the trade. So let's say, let's say, if any of these distances here are violated, and let me get these set up again. There we go. So let's say we're going to use the same stop loss and profit target distances as we did in order set A. So if any of these are violated, then we could set this to skip the trade. So our runners would just never get executed. But order set A would get executed, in hopes that you would get your quick 10 tick profit target there. But the runner would just get skipped. So you can mix and match, all of these options here with each order set. All right, let's see. Well, now we'll kind of get into the real meat of setting up a order set, which is, most people are most concerned with profit targets and your stop losses and setting those up. So let's kill that. So I'll kind of kill these here, and let's just kind of run through. Right, we have some predefined ones. So if you're interested in just setting a fixed profit target, just a simple, easy to understand profit target, right? We have a 10 tick, which is just a simple offset from the entry price. So, right, 10 tick offset from the entry price. And so, you can just, so if that's the style of profit target you're using, just select 10 ticks, and then you can go in here, go into your initial placement, and you can easily adjust this, right? So you just click inside the box here, click inside the box, and down here in the offset, you'll see down here is where we actually define our profit target offset. So if I wanted a 15 tick profit target, I can just increase the longs to 15. You can see my short side automatically adjusts to negative 15 automatically. If you have a bias to the long side versus the short side, you can turn off the sync button. So you notice how it kind of goes grayish versus when it's green when it's on. So I turn the syncing off, and so therefore I could set a smaller profit target for the short side to only 10 ticks, but for a long trade I could set a 15 tick profit target. And if I turn the syncing back on, then it's going to match my short side to the long side there. And so you can see that we're offsetting 15 ticks from the entry price here, from the entry price. There are other prices available here that you could offset from. So let's say you wanted to use the previous bar's closing price, as your offset. So you could set your profit target 15 ticks from the previous bar's closing price, or the closed bar's closing price. You could even use the median price of the previous bar. There's other prices here available to you. If it's a long trade, you could even set a 15 tick offset from the ask price, wherever the ask price happened to be when your order got executed. So, but the vast majority of the times you're just going to want to leave this on the entry price. So we'll do a 15 tick from the entry price, right? So that's how NinjaTrader ATMs always operate, from the entry price. So, and all right, so let's cover some of the other profit targets. So if you want your profit target set based on volatility, you can use an ATR, right? So an ATR basically measures the volatility of the bars on your chart, and therefore your profit target would be adjusted automatically for you. And so, if you're using an ATR to set your profit target, you never know what the volatility is or what the volatility is going to be. So therefore your profit target is constantly going to be increasing or shrinking, right? The number of ticks if you're using an ATR. So that could be a good example of why you might want to use some placement safeguards, right? So you can use an ATR to set your profit target, but then you could also go in here and set a minimum and maximum profit target. So that way that, if the market gets too volatile, you may not want your profit target set more than 50 ticks. So you can place some constraints there in a really volatile market, but also at the same time, if the market is just dead and it's really consolidating, you may not want your profit target any less than 10 ticks. And so you could turn on these safeguard placements, these placement safeguards here, if you're using an indicator. So remember, the ATR, that's an indicator, right? So that indicator is going to be constantly adjusting to market volatility, and therefore you'll never know exactly how many ticks your profit target is going to be set to. It's just going to be constantly auto-adjusting here. And you'll notice it's the default here is 2 ATRs, right? So 2 ATRs is basically double the average bar length. So if you notice, I'm using a 5 range, so an ATR doesn't using an ATR in a 5 range really has no effect. Right? Using ATR really only works with like minute charts or tick charts. It works with bar types that will constantly have different bar lengths. But 5 range or Aranco bars, range and Ranco bars, those have fixed bar lengths. So an ATR isn't really practical for those type of charts. And if you want, you can go in here and let's say if two ATR is not enough, let's say you want to try and capture more profit, you can just go in here and you'll notice now we're using a long factor. So we could just increase the long factor up to 3. And now we have a 3 ATR profit target. Right? A 3 ATR. So when you're using an indicator, as your offset, then if you want to double the indicator value, right, a long factor and short factor of 2, that doubles your indicator value. If we set it to 3, then that takes the ATR and it multiplies it by 3. So you get a 3x multiplier on the ATR. So you can even go in here and type a 1.5 if you want. You can go 1.1, 1.75. So you can put fractional multipliers in here. I could put 1.4 as my multiplier. And there, so now we have a 1.4 times ATR. So you can adjust your long factor and short factor by whatever you want there. Right. And you can also still add a tick offset. So I could say, 2 ticks plus a 2 ATR multiplier. Do something like that. So I've got a 2 ATR plus an additional 2 ticks. So I can just add in 2 extra ticks as well. Right? You can use all of these together here. All right, let's see. Let me just take a quick look, see if I saw a question come in here. I want to see if it's related to this. Yes. Okay, so the question is, RJ is asking, can you use a moving average plus, say, 50 ticks, moving average plus 50 ticks for a profit target? Yes, you could. And calc on every bar close. Yes, you could, RJ. Yeah, so while we're on the topic here, and let's see here. Actually, there is no... yeah, we'd have to use a custom here. So I'll cover that here in just a moment here. Yeah, if we wanted to set our profit target based on a moving average indicator, yeah, we could set a custom profit target to do that here. But first, let me just kind of cover the swing. Well, actually, yeah, I'll cover it right after the swing high-low. So if you want to set your profit target to, the last known swing point, right? That's what the swing high-low is a swing point. So we have we can set our profit target to the swing pattern. And what that is doing is, let me put the indicator up on here. So with shark indicators, a couple of indicators are included here for free. So we have this swings, highs, lows indicator that we've included for free. And what it does is it tracks swing points here. So what we're going to see is the widest tops and the widest bottoms. So the widest tops, that's the highest high. That represents the highest high. And the widest bottoms represents the lowest low within the number, within the known swing points, right? So the number of swings tells the indicator, okay, how many swing points back can you look to find the highest high or find the lowest low? And then also there's a swing sensitivity, which will determine how often swing points are discovered, right? So we'll just go with 3 and 3 for now. We'll take a look at what this indicator shows us. So right here is the last known lowest low. And here is the last known highest high. And you can see that the indicator, is going from swing point to swing point like that. And the swing points that it's actually detecting are those. So my dashed arrows, are actually pointing to the actual swing points of the bars, and then my solid arrows are just kind of just identifying how the indicator is, when the indicator is switching from swing point to swing point, right? So this is the indicator, right, that BlackBird is using to identify swing points. Of course, you can use your own custom indicator. If you have a indicator that you prefer that identifies swing points for you, of course, you can always use that. But this is just one that we've, included with Shark indicators for free. So let's get our order settings window open again here. Actually, just a moment here. Let's get rid of that there. So, all right, so with our profit target, we're using swing patterns. And if we open this up, we can see we can adjust the number of swings that our indicator is using. We can adjust the swing strength of the indicator. And then you can adjust which plot that we're using. So for a long trade, right, typically you're going to want to use the tops. In other words, the highest highs. So the tops is going to be the swing high points. And for a short trade, the bottom plot, that's going to be the swing low points, the magenta lines there. So, and if you want, of course, you can add an offset as well. So, you can go a couple of ticks, above the swing high that the indicator identifies, whatever you want, or you can go, one tick underneath the swing high. So if you're kind of worried about double tops, you could set your profit target to whatever 1 or 2 ticks below, the nearest swing high, like that. That way you get your profit target hit, before a possible double top is made, whatever you think is necessary there, like so. And so, yeah, that pretty much covers it for, using swing patterns like that. So next, let's go into custom. So now we could do a custom, and pretty much you just have a blank slate. So the initial placement is just set to the entry price. So you obviously have to go and change your initial placement. And so this is where, we could use a custom indicator. So you can see right here, here's our options. So our select mode, we have a couple of different modes. You could use price, a indicator value, you could use swing points, or you could even use a linear regression channel, right? So the linear regression channel, that's a pretty unique indicator unto itself. So let's just put an indicator value. And so, here's a moving average. So, if we're going to use a moving average to set our profit target, we probably need something, fairly slow moving. And And then the question from RJ was, can we do that plus 50 ticks? And absolutely, I'll just put 50 ticks down in there as my offset. So there we go. We have an SMA 50 plus 50 ticks. And just like that. If I click OK, now let's put our SMA on there. And let me just kind of clean up the board. So let's put a 50 tick SMA on there, like so. And let's draw a little box here that's going to be 50 ticks high. Alright, so this is a huge box here, and let's go into the dynamic planner. Let's plan long, and guess what? I've got some constraints set here, don't I? Yep. So I need to go in here and let's see. Yep. So let me turn off my constraints here. And oh, let's see. Yeah, I've got some other. Let's see, what others ones do I have? Oh, oops. There we go. Let's just reset all that. All right, and let me. Yeah, let's turn off this too. Okay. And I must have something else set somewhere. All right, let's turn off this risk per trade as well. And let's see. What? Let's set up a stop loss. And let's see, I've got something here. Setting some limit. Oh, ah, shoot, it's not remembering. Okay. It's not remembering my settings there. Yep, okay. Let me just delete everything and set this up again. So, profit target, we're going to do a custom profit target. And we're going to set our mode to indicator value, and we're going to set this to an SMA. And we want a 50 tick offset from the SMA 50. Okay. And just for fun, we'll throw a stop loss in there. And all right. Let me just reset the strategy here. Okay, let's start this again. Market order. And let's see, I had 7 up there. All right, let's do a custom profit target. And we're going to set it to a indicator value. And we want it to be the SMA 50. There we go. With a 50 tick offset like that. Okay. And great. And let's just throw in a stop loss just for good measure. Dynamic planner. There we go. All right. So let's just measure this here. There. So there we go. We can see we've got a 50 tick offset from the SMA 50 right there. And let's say if we use the SMA 14. All right. So there's the SMA 14, which is a little higher. So if we turn that off, let's go in here. We'll adjust our profit target indicator to a SMA 14. Adjust that down to 14. There we go. Click OK. And hopefully you guys notice, right? All these menus that pop out. Basically, you notice that there's no OK or cancel button here. So all you gotta do is you just click somewhere off. Just click somewhere off the screen, and that basically closes everything up. Just click off somewhere. Let's click OK. Let's get back to dynamic planning, and let's move our rectangle over. There we go. Okay. So, all right. So that's so that's for the initial placement. All right. So also RJ would like to see to have the profit target recalculated on each bar. All right. Yeah. So to do that, just a moment here while I clean up my board. Okay. Let's turn off that and let's go back into our order settings window. So if we want our profit target to get recalculated, so it's always adjusting with our SMA 50 here, then actually, I'm sorry, SMA 14. Let's change this back to, well, actually no, I guess I'll leave it at 14 because that'll adjust really quickly here. All right, so we're going to go into trailing actions here. So we're going to set up a custom trailing action or trailing rule. And so we need to add a trailing rule. And let's stretch this out a little bit. And so let's probably give this a name here. So let's just call this a profit target, set to the SMA 50 plus 50 ticks. So I think that sounds pretty good for a name. All right, so there's no delay. There's no triggering event. We just simply want to constantly move that profit target. So action is where you move the order. Actions, is the action column is the action that you're taking. And so if you're moving an order, right, that is an action. Moving something is an action. Right, and so the action is already, it defaults to the move order to. There's a couple of other actions here. You could freeze the order, or you could remove the order as an action. But typically, your action will be to move the order, and we want to move the order. We don't want to move it based on price. We want to move it based on an indicator value. So let's go in here. We have an SMA 14 set up by default. So let's change that to our 50 SMA. There we go. And again, we want a 50 tick offset. All right, so we have an SMA 50, an SMA plus 50 tick offset there. All right, and now we want to repeat this. So we want this trailing rule to repeat on every bar. So we'll set our repeat, set it to indefinite if you want it to repeat forever, and then the default setting here is every bar. So repeat every one bar. And that's all we have to do. So all we had to do is just set it to repeat indefinitely and just use the default settings here of every bar. Like so. All right, so let's recap our trailing rule here for the profit target. So there's no delay, there's no trigger, but the action is move the profit target to the SMA 50 plus 50 ticks. And we're going to repeat that every bar. And we'll click OK. And then let's see, let's just we'll just go long here. Oops, it's all right, wrong button. Just go long there. Okay. And let's see, let's see, I must have had a number set wrong somewhere. Let me just double check my indicator values here. All right, let's see. Oh, that did get reset to the SMA 14. Sorry about that. Okay. There we go. Let's pop that 50 back in there. All right. SMA 50 plus 50 ticks. And let's see. Yeah, we're still on an SMA 50 there. That looks good. And let's get rid of our stop loss so it doesn't get hit. All right. Now let's go long. And let's see here. That is our SMA 50, and let's click OK, and we close that. And let's go along again. And, well, guys, let's see. I'm going to put another SMA on here. I have a feeling that SMA 14 is somehow stuck in memory. Let's see. Let's just find out here. Okay, there's an SMA 14. I'll set that to dashed. And oh, sorry. The indicator on my chart is wrong. Okay. All right, let's set the SMA on the chart to back to 50. There we go. That's what my problem was. Okay. Good deal. All right. That's probably the number one problem that we encounter, is that the indicator settings on the chart don't match what people input into Bloodhound or BlackBird. Yeah, so always double check those. All right, as you can see, it's very easy to overlook and forget that you changed an indicator on your chart and you need to set it back, So, all right, yeah, there we go. And there's 50, and actually, yeah, that's right. Let me set it back to an SMA 14, because that SMA 14 moves around a lot faster, doesn't it? So let me just kind of go through, change everything again real fast here. All right, SMA 14. Let's go to our trailing rule. And I'm just going to switch this to an SMA 14 real fast as well. Oops. All right, SMA 14. Just double check, and 14. Yep, there we go. Click OK. So I need to close the order, and I'll refill it. There we go. All right, and so let me just pull price down here. We'll just pull the price down, and we'll watch our profit target start ratcheting down. Yep, there we go. See, it already moved. We can see the SMA is diving down, and our profit target is starting to pull down with the SMA. There we go. It's looking good. So as price dives, so is our profit target. All right. Move our little measurement stick back down. There we go. All right. So that's our moving profit target there. All right, let me just check the board here. And if there's nothing else, yeah, all right, I don't see any other questions or comments on this, so I will continue on with the rest of the OCO order sets here. So again, profit targets, just a few presets there, the most common ones. Let's see, let's go back into custom here. So let's take a look. I'll just recap the various options that we can use here. Price. If you want, you could set your profit target based on price, prices of bars, bar prices, basically price. Right. Typically, you're offsetting your profit target from the entry price. Here, it's usually some kind of an offset, but if you want, you could set your profit target based on some other prices, right? So let's just say, off the top of my head, let's use the high. And so let's say we want to find the highest high of the last 10 bars. So if we want to set our profit target to the highest high of the last 10 bars, then we set our look back to 10, and then we want to find the maximum value, right? So we want to find the maximum highest high, or the maximum highest price of the last 10 bars, like so. And you can see that the short side here was set up for us automatically. So the short side used all the opposite values. So you can see that's kind of one of the cool features about BlackBird is when you set your long trade up, the short side automatically adjusts for you automatically. So you can see this is going to find this is going to look at the low prices for the last 10 bars, and it's going to find the minimum value. So it's going to find the lowest low looking back in the last 10 bars to set your profit target for a short trade, like so. So if we wanted to use prices like that, we could do that. And let's just click OK. And let's go long. And so here we go. Here's, looks like that's the, oops, I grabbed that flag by accident. Put that back, there we go. So it looks like that bar right there, looking back 10 bars, that was the highest high of the last 10 bars, and it popped our profit target right on that guy. So, let's take a look at, see if there's anything else here to look at. Well, indicator value, of course, pretty simple. If you have some kind of third-party vendor, that has suggested profit target prices, you could plug that in here. You could select that indicator for you. I don't think I have any. Let's see. Yeah, as far as I know, I don't think I have anything installed here. So I don't really have any examples to show you. Other than, well, actually, let me do this. I'm going to put some pivot type indicators on here. All right, yeah, I'll use Ninja's pivots indicator. And let's see, here's R2 right there. Let's see what else we got. Yeah, R2. All right. So let's set our profit target to R2. So if we go in here, so what I can do, I'll just cancel this profit target. I'll just go and select custom again, open it up, and we'll set an indicator value, and I'll open up our indicator window, and we'll go find the pivots indicator. All right, there's our pivots indicator. Just a quick little note, there's a NinjaTrader bug, so you can't use the pivots indicator within a strategy using daily bars. So they've got a little note up on their support forum why that doesn't work, but it doesn't work in Ninja 7. So you have to use calculate from intraday bars, right when you're using their indicator within a strategy. So, all right, so let's see. So we've got the prior day high-low close set to calculate from intraday data. And now let's select, let's select our long will be R2, and let's see, a short profit will be S2. All right, so if we're taking a long trade, we're going to set our profit target at R2. If we're taking a short trade, we'll set the profit target to S2. So we've got our, there we go, we've got our indicator set. And let's say, you know, we just wanted to get that profit a little sooner, so I could set a long offset of -1 ticks. Right, for a long trade, it's going to be 1 tick below R2. For a short trade, it'll be 1 tick above S2. So there's an example of using a indicator, and let's just go along. And there we go. We can see our, let's scale that up there. So now we can see our profit target is 1 tick below R2 there. Just 1 tick below it. And if we reverse, and we can see now our profit target is just 1 tick above S2. So there we go. There's S2 is the red line, and I accidentally clicked on the flag again. There we go. Yeah, so you can see the red S2 line right underneath our profit target. So there's an example of using a indicator values with your profit targets. All right. Well, you know, profit targets are typically pretty simple. You know, I think I hear most that most people are concerned with their stop losses, and so our stop losses have a lot more presets in here. So you can see these are all fixed profit or fixed stop losses. And then we have a trailing stop loss section here as well. So, let's see. I guess, you know, I'll just kind of run through these quickly here. So again, a simple 10 tick stop loss. Right. So we have a initial placement at our entry price minus 10 ticks. Right. That's simply what a simple stop loss is. So you can see we have our, for our offset, we have our long side is a -10 ticks, and it's set from our entry price right there. Right, pretty simple for a simple stop loss. You know, if you want to do 10 tick trailing here, go to trailing. So the initial placement, that's the same. The only thing is on the trailing actions tab, right, we have our mode set to standard trailing. So what this does is, our stop loss will trail the market by 10 ticks. And let's just kind of do an example here. So let's kind of get rid of some things. Let's close this out. Okay, let's go along and let's just push the market up. And you'll see as market goes up, you can see our stop loss is going up. Let me just change the scaling there. There we go. So we just reached 10 ticks. And you see our stop loss was at break even. And so as price just ratchets higher, it's just staying at a 10 tick trailing stop loss. All right, pretty simple. If we wanted to create some kind of a custom trailing stop loss, we could change this to custom, and then we could add some trailing rules in here. So, all right, let's see. Next stop loss. Again, we have an ATR based stop loss. So, this time it's a 1.5 ATR stop loss. So if you don't want 1.5, if you want that to be a 2, you just go in there and change that manually to 2, and then you can increase it or decrease it. So, right. For a stop loss, you want to keep things as a negative value, right? If I set this as a positive 2 ATR, that's going to try and put my stop loss above the market. And so your stop loss obviously would get filled instantly, right? So stop losses for a long trade need to be negative values, right? Your stop loss is going to be a negative value, whereas your profit target, it's going to be a positive value. So just keep that in mind for long trades, right? For long trades. So, if you notice that for a short trade, the numbers are opposite, right? So for a long trade, we were using -2. For a short trade, we'd be using a +2 factor. So, and so again, if we want to use a trailing ATR, right there, we can select this trailing ATR, and for some reason this trailing ATR is based off of the closing price versus the entry price. So if you want to use the entry price, you can just go and change it to the entry price. Just like that. So now it's a 1.5 ATR based off of the entry price. And then if we take a look at our trailing actions, so since we're using an indicator, right, the standard trailing fixed offset doesn't apply here because we're using an indicator. So you can see that we do have a trailing rule set up here. And if we take a look at the action is going to move the stop loss order to the last price minus 1.5 ATR. Right? So we're going to take the last price and then take an ATR of 1.5 times, and that'll calculate our stop loss. And then, oops, I clicked off too far. So, and the repeat, right? So this is going to repeat once every bar. So typically, if you're using an indicator to set your stop loss price, or if you're using an indicator to set your profit target price, right? Typically, you only want your orders to move once per bar. Right? That's going to be typical use case scenario there, right? Because typically your indicators update themselves when the bar closes. So your repeat will typically be set to 1 bar. So that way your stop loss gets trailed or readjusts, once per bar when the ATR is updated or calculated there. So, all right, let's see what the next one is here. But hold on a moment. I see some questions came in, so let me see if these pertain to what we're discussing here. All right, yeah, so Jeff is asking, can you show us how to chart the ATR so we can see it visually? Yep. So let's say we're using this ATR here like so. So simply just put the ATR on your chart, like so. Let's see, 20 period. Yep. So one thing you'll want to note is take a look at the period. So in BlackBird, we're using an ATR with a 20 period, right? So you can adjust your ATR period to whatever you want. So if you don't want to use a 20 period, if you want something, a longer period or a shorter period, you can just go in here, click the 3 dots, and you can see ATR is set to 20 period. So if you want to average out the volatility a little more, and you could set your ATR up to 50 period, or if you want, you can set your ATR down to a 10 period, whatever suits your fancy there. So, so whatever you have, whatever ATR period you're using in BlackBird, also keep in mind, if you're doing a trailing ATR, you also have the ATR period setting in the trailing actions as well. So go to your trailing rules and check the period of your ATR in here as well. All right, so you'll want your ATR period in your trailing rule to match the same ATR period in your initial placement. Right, so you're using the ATR in 2 places. Right? Your indicator gets used in the initial placement, but also your indicator gets used in the actions here as well. So 2 places to look for your indicator values. And then simply put put your ATR on your chart, and there you go. That's it. So you would just take, the number you see here on your ATR. So we have 0.055 cents. Multiply that by 1.5. So that gives you 7.5 cents. And so that's what your stop loss is going to be set to. Your stop loss will trail by 7.5 cents there. All right, so Jeff would like to see the ATR stop price on the chart panel. Well, Jeff, you'd have to create your own custom indicator to do that. So if you want to translate the ATR indicator into actual prices on the chart, you'd have to write your own custom indicator to do that. So, but the ATR. So, if you just put the ATR indicator on your chart, you can see that is the raw value of the ATR, that BlackBird is using to calculate the stop loss distance. Right, so this ATR is basically, it's just a distance, right? So right now it's 0.05, or in other words 5 ticks. It's 0.05 points is what the ATR is. It's 0.05 points. So that would be 5 ticks on oil, on the oil chart. And so BlackBird just simply does the internal math and sets your stop loss. So yeah, if you wanted to actually see the actual prices on there, you'd have to write your own indicator to do that for you. So all right, good. So let's let me continue on here. All right, so let's see the next order set. All right, so our first stop loss is just a simple 10 tick. The next one uses a indicator offset. So it's not the ATR is not an indicator value. It's a indicator offset. So the third one down here, this is using bar prices, right? This is using prices here. So we could set our stop loss to a previous bar's low, for a long stop loss, or we could also set up a trailing. So let's take a look at the trailing one here. So previous bar low for long, or high for a short trade. So this here, so if you look at the initial placement, you can see we're using prices here. So our select mode is set to prices here. So we're using prices. So for a stop loss, we're going to look at the low price of the bar, and we're just looking at the previous bar's low price. And there's no offset or anything. It's just the low price of the previous bar. Pretty simple. And then the trailing rules, it's going to be the same thing. So the trailing rules, again, there's no delay, there's no trigger. The action is just simply going to be move our stop loss to the current low price, of the previous low price. So if we open this up, we'll see this window is set up exactly the same as the initial placement window that we just looked at. So we have our mode is set to price, and we're just looking at the low price of the last bar. Right? We're looking at the last bar, the previous bar, just grabbing the low price, and that's what we're setting the stop loss to. So you'll notice if a window ever just kind of sits floating out here, all you gotta do is click the X and that window goes away. All right, so let's just let me yeah. So if you're using bar prices, you got to keep in mind sometimes that's going to be invalid here. So if I try and go along there, and oh wonder, there we go. So okay, yeah, my chart wasn't on the current bar there, but luckily price had just moved up, so I could actually place that. I could actually place a long, but if I tried to place a short order, that wouldn't work out so well. right? Because that's the high of the previous bar, which is below the market right now. So if I try and go short, right, it's not going to work out. You can see I got this little error message. Basically, it's telling me that my stop loss was placed at a invalid location because I'm using bar prices to set my stop loss. And so my stop loss was actually set below the market for short trades. So, just got to keep in mind of various implications if you're using, bar prices. Bar prices may not always work with you. So, right. So, so let's say you wanted to use the low prices, but you wanted it to be a little more flexible. So let's say you wanted to use the lowest low of the last 3 bars. So again, you could use the low price, set your look back to 3, and then you wanted to use the lowest, so you want to use the minimum value. So you want to use the minimum of the last 3 low prices, and then for a short trade you'd want to use the high, and you want to use the maximum value of the last 3 high prices to set your stop loss. So that sets it up for the initial placement here. So next we need to go into the trailing actions and do the same thing. So let's go into actions, right? This is where we're setting the price to move our stop loss to. So let's go into here, and we have to do the same thing. We have to increase our look back to 3, and we want to use the minimum value of the last 3 low prices. Right? In other words, the lowest low of the last 3 low prices. And our short side is set up for us automatically again. So, and let's close that out. Click OK. Now, again, if I try and place a short trade, we're going to have problems here because we don't have the last 3 high prices are below the market. So if I try and go short, right, we're going to have problems here. Just keep that in mind. But I could go long, and you can see there we go. My stop loss is set to the lowest low of the last 3 bars. So there's the last 3 bars. All right, and if price moves up again, let's move price up. And we'll see our stop loss should jump up to there. And 1, 2, 3, let's see here. And, shoot. Hold on a moment. Let me take a look at my trailing rules just to make sure I have things set correctly. It didn't look like that stop loss moved. And repeat every bar. That looks good. All right. I'm gonna cancel my profit target there. All right. So there's the last 3 closed bars. All right. Our stop loss will move up as soon as we get another bar closed. There we go. All right, so as price keeps ratcheting up, our stop loss will keep ratcheting up. And the arrow is pointing at where the stop loss should move to next. Right, because we have our stop loss set to use the lowest low of the last 3 bars. So let me just get price to move up a little bit. There we go. All right. Okay, so there we go. We just adjusted that stop loss there to follow the lowest low, the last 3 bars. And we can see that stop loss is just going to keep ratcheting up like that. All right, let's go. Let's keep moving on here. All right, so we saw an example of using, bar prices to set our stop loss. So now the next one is an example of using an indicator. So the parabolic SAR is sort of a stop loss type of indicator, and we could set our stop loss at a fixed, it's just a fixed location of wherever the parabolic SAR was, when we executed the trade. Or we could set up a trailing parabolic SAR stop loss. So let's use the trailing one. And before we continue, let's put the parabolic SAR on the chart. And I'll set it to red here. There we go. Okay, so the red dots, that's our parabolic SAR there. And so let's take a look at how this is set up. All right, so our initial placement, so you notice our select mode is now set to a indicator value, right? So when we were using the bar high and low prices, we were using the price mode, but now we're using indicator value mode. And we have our indicator set up there, right? We're just using the default values for the parabolic SAR. Right, simple enough. And so that's the initial placement. Now the trailing rules, again, it's just kind of a repeat of what we've seen so far. There's no initial delay, there's no trigger. We're just simply using the action to move the stop loss order, right? We want to move the order to the parabolic SAR. So down here, if we just open this, again, our select mode is set to indicator value, and we just have our parabolic SAR indicator set up. All right, pretty straightforward. And then the repeat, since we're using a indicator, we're going to repeat the action, or basically repeat the trailing rule once per bar. Once when the bar closes. All right, let's click OK. And of course, we got to keep in mind, what side of the market our parabolic SAR is at. So parabolic SAR is in a short state. So if I try and go long, if I tried to go long, I'm just going to get an error telling me that my stop loss is invalid. So let's go short. We can go short. And if I pull price down, so we'll just pull price down and we'll watch the stop loss to start ratcheting down here. All right, so just let a couple more bars go by. We'll see that work play out here. There we go. There's another bar. All right. Okay, let's continue on. All right. So, if you're going to, say you want to use your own custom indicator, such as, last week we covered a couple of the ANA indicators that act as stop loss trailing indicators. There's a chandelier stop. Probably the most common is the SuperTrend. So I'll put the SuperTrend on here. And we can see the red and blue lines for the SuperTrend. So, let's say you wanted to use the SuperTrend instead of the parabolic SAR, then the easiest way to do that, if you have your own custom indicator that you want to use, the easiest way to set that up is just use one of these, use the use the preset here. And so we'll select the parabolic SAR preset, and then we can just go in here, find our initial placement, and we just replace the indicator with what we want to use. So let's just open up the indicator list. Let's go find our SuperTrend. There's our SuperTrend. Put that on there. Adjust any kind of parameter settings that you might be using. And then the stop dot. We'll just follow the stop dot. Sorry, that's fine. So that's our initial placement is set up. And remember to go into the Trailing Actions tab. And under Actions, we need to replace this parabolic SAR with our indicator that we want to use. So I'll just go find the SuperTrend again. Again, make sure you change any parameters that you might have adjusted that you might be using on your chart. Change those. Again, we're just going to use the stop dot as well. And we're switched over to the anaSuperTrend now. And here we go. So now we converted our stop loss over to follow the anaSuperTrend. So if I close this out now and then go short again, there we go. Our stop loss is following the SuperTrend indicator now. All right, and let's see. All right, swing prices. Now, earlier, we showed setting our profit target at a swing point price. We could also set our stop loss at swing points as well. So let's go in and let's set up a trailing swing point stop loss. So we could follow the swing low or the swing high point. And if we go in here, let's go to our initial placement. It's going to follow the swing patterns. And this is the same window that we saw for the profit targets, But we're going to set our stop loss at the swing low or the swing bottom. And in this case, we're actually using this is set up to use the tightest instead of the widest swing point. So, if you want to, if you need, if you need to read, or if you need to learn what are the widest swings versus the tightest swings, then what you need to do is you need to pull up the documentation for the swing high-low indicator. So again, let me put that indicator on the chart here. So again, BlackBird, when you're using swing points, BlackBird is using the swing high-lows indicator. And you can see there's tightest plots and there's also widest plots. There. So let's see, let's turn on yeah, I need to turn on the tightest plots as well. And I just need to get some colors set up here for this indicator. Alright, see how this looks. Okay, I think that looks good. Alright, so you can see this swings, highs, lows indicator. It tracks different swing points, and again, if you want to kind of learn more about that, what we can do is from BlackBird, right, we got a little help button up here, and we can go to the documentation, and there we go. Let's open up the documentation here. And let's see here. We need to go to the general support documentation actually. And if we scroll down under Bloodhound, here we go. We have other indicators. So here's the swings and the swings, highs, lows. And the first one is the swings indicator. And if we scroll down, we have the swings, highs, lows indicator. All right. And so this explains how this indicator works here. So it's a bunch of screenshots and everything that kind of illustrate it. So let's see. I don't want to fully get into it for this workshop here. But basically, to kind of get back to the point here, so we're using the swing patterns for our stop loss. We're using that quick list, quick list there. And so, what that's going to do is that's going to use the tightest plots, which is the dots. So if you follow the dots, those are the tightest ones. That's what I set up on my chart. I set the dots up to be the tightest plots. The widest swing points. So if I set the widest swing points, those are the hash lines. So if you see the hash lines there, those are the hash lines, and that would be the widest swings there. At least on my chart, the way I set it up. So let's just do an example here. So once again, you do need to keep in mind where your swing points are at. So let's take a short trade here. So we can see our blue dots are up top here. Here we go. And if we took a short trade, there we go. That's our red dots for the swing low right there. So let's take a long trade. There you go. Our stop loss is sitting right there, right where the reddish dots are. Yep, and we got taken out. So now if we tried to place a trade now, it would be invalid because its price currently moved below our most recent swing point. So if I try to go long, and do that again. And it's all right. Let's see here. Oh, wow, Ninja Trader was just thinking about it for a while there. There we go. And let me pull. I'm going to pull price down here just to kind of illustrate, what's going to happen if you try and submit an order that, where your indicator, is setting your stop loss at an invalid location. So, all right, just wait for price to come down. There we go. So now if I try and go long, and great, it's actually, let's see. Let me just double check my settings here. There we go. Finally got it up. Wow, it's just Ninja Trader is just running really slow. Yeah. But, okay, that kind of illustrated that. Basically, right, we got that error message about the stop loss came up, when we try and take a long trade because the indicator is trying to set our stop loss above the market for a long trade. Okay, so just once again, I just can't emphasize enough, if you're using indicators to set stop losses, you always got to make sure that you're taking a trade, that agrees with your stop loss indicator. So, okay, let me just pause here for a moment. And let me just take a quick look at the question board, see if there's any questions on this topic here. Jeff was asking, how do you use the SuperTrend as a trailing stop if your trigger to go long occurs when the SuperTrend is still above the entry, or basically when the SuperTrend is still in a short state, right? So you can't, basically. So Jeff, I hope you kind of were paying attention. That's what I was illustrating. That's what I've been illustrating, is that if your indicator is telling you that, if your stop loss indicator is telling you that you should be in a short position, but you take a long trade, well, there's no way to get around that. You're just going to submit a invalid stop loss. That's what's going to happen. So, So for example, yeah, let's see here. Right, our super trend is right there, and it's in a short state. So if we go in here, let's just set up a simple super trend. So I'm going to replace the parabolic SAR with the super trend. Right, just like so. So my initial placement is at the super trend. Click OK. And we can see that right there is our super trend. Right, so obviously we can't submit a stop loss above the market for a long trade. But if we do, that's what happens. You just get an invalid message. So you just got to make sure that when you're taking a trade, that if you're using a indicator value, just set your stop losses or your profit targets. Basically, if you're using an indicator, just set any of your order type, any of your order prices. You have to make sure that you take a trade in the direction that agrees with your indicators, right? Otherwise, you're just going to be submitting invalid orders to the market and you'll just get canceled out. So, let's see. So let's see, what is our, let's see. Yeah, well, the swing points, swing point stop loss. That was the last one here for our quick list. Yeah, all right, so we got through all of the quick list stop losses here. So, all right, we'll just kind of leave it at that. And from here, I'll just, we'll just switch this over to an open Q&A now. All right, so let's see who's got the first question here. All right, RJ's got the first question here. So he's asking, when building a template, and I guess this would be a BlackBird template. When building a template, does all the work need to start from the smallest time frame and move to the next largest? Let's see. Okay, so I guess RJ's question must involve using Bloodhound logic with his BlackBird. Okay, so in this question here, RJ is going to be using Bloodhound to initiate his entry signals, and also he'll be using Bloodhound to initiate the some exit signals as well, exit signals. So keep in mind, these are not stop loss signals, these are exit signals to flatten out the trade. So Bloodhound does not control the stop losses. Right? Bloodhound does not set price values for stop loss orders. Bloodhound just provides trade signals. Right? It's just a signal generator. It's not a price level or price value indicator. So it doesn't set price values for stop losses. So with Bloodhound, you can get an entry signal or an exit signal to flatten out. So RJ's question again is, when building a template, does all the work need to start from the smallest time frame? Yes. So, yes. So you'll want to have BlackBird running on the smallest time frame. Assuming that your Bloodhound logic is using other time frames. Right. So if your Bloodhound logic is using other time frames, you want BlackBird to be running on the smallest or fastest time frame. and then Bloodhound will be looking up to slower or longer time frames. So let's see, for example here, RJ's got an example here. So you would enter on a 5-range chart, and you could have exit signals coming from a 15-minute chart. Yeah, so that would be correct. Yep. Yep, so you would want BlackBird to be running on your 5-range chart, which would be faster than your 15-minute chart. Let's see. All right, so the secondary question here from RJ is, does the exit signal need to come from the same 5-range chart? No, not necessarily. Not if you're using Bloodhound. So so if you're using Bloodhound inside of BlackBird, just follow the same time frame guidelines as that is recommended with Bloodhound, right? So it's recommended that if your Bloodhound is using multiple time frames, you want things will run better if your Bloodhound is set on your lowest time frame. And so the same rules apply to a strategy. So you would want BlackBird to be running on the lowest or the fastest time frame, the shortest or the fastest time frame. So, and then you could have your exit signals based on higher time frames if you wanted to. So, okay, let's see here. Okay, so Frank is asking, how could something be set up to protect profits once price moves a certain number of ticks into a profit zone? All right, so let's say, Frank, for example, you want to move your stop loss to break even plus a few ticks, something like that. So, yeah, all right, let me just let me clean things up here a little bit. Okay, so let's repeat Frank's question here. How would you set something up to protect profits once price has moved a certain number of ticks in a profitable direction? All right, so let's just set up a stop loss here. And all right, so let's just set up a fixed stop loss, and let's increase this to a 20 tick stop loss, so it's really obvious. And then what we'll need to do is go into the trailing actions, and we'll set up a trailing rule. So we're going to set up a custom one, and then we need to add a trailing rule here. Let's add a trailing rule. Okay, so let's name this here. Let's call this all right, we'll just call this trailing rule to protect profits. So the key is here is the initial delay. So you can see the first option that comes up in the initial delay is the ticks in direction. Right, so there's all kinds of delays here that we could use. You could count the number of bars as a delay. So, say for example, after 5 bars goes by, you could do something with your stop loss, or you could do something with your profit target, whatever, anything after 5 bars or whatever it might be, or say like after 5 minutes, you could do something with your stop loss, whatever kind of timing delay. But in this case, we're going to do ticks in direction. So in direction basically means a profitable move. So when you get so many ticks in profit, we want to do something, right? So let's say, once we get to 10 ticks, or let's do 12 ticks in profit, then what we want to do after that is we want to do some kind of an action, which would be to move our stop loss, right? We want to move our stop loss so that it protects some of that profit. So let's open up the action, and we don't want to move our stop loss to the last price. That would move our stop loss up to wherever the market is. Remember, the last price is where the market's at. That's the market price. Last price and market price is the same thing in NinjaTrader. So we don't want to move our stop loss to the last price. We'll actually base it off of the entry price. And let's say we'll do plus 5 ticks. So we'll move our stop loss 5 ticks above the entry price, right? So that protects our profits. So that's at least we'll capture 5 ticks of our profits here. All right. And oops, I clicked off too far there. And this repeat, we only need to do that once, right? So we're going to basically, what we created is basically a break even. So at 12 ticks of profit here, our delay is at 12 ticks in profit. We're going to move our stop loss to the entry price, which is break even plus 5 ticks. So this is like a break even plus 5 ticks. Once 12 ticks of profit has been achieved there. And, basically a break even is only done once. So the repeat, there is no repeat. We're just going to do the action just once. So just leave it on none. And let's click OK. And let's see here. Let's go long. And let's move the market up. So roughly speaking here, once we get to 12 ticks in profit, there. All right, so once price gets to the top of that box there, that should trigger our stop loss. All right, let's wait for price to get up there. All right, come on. I guess I'll move the trend up here a little bit. There we go. Bingo. All right, just happened. So there we go. Our stop loss moved up to 5 ticks in profit. All right, so there you go, Frank. And let me just open this up again so you can take a look. So we're in the trailing actions here. So there's the 2 key settings here. Is our initial delay. Determine how many ticks in profit you want to wait, and then determine where you want to move your stop loss to under actions. And that's right. Every time I click off, this goes away. Sorry about that, guys. All right, let's see. Frank's got a second question here. And let's see. Okay, so Frank is saying something like a variable trailing stop that changes its values when the current price moves a certain number of ticks into a profitable area. A variable trailing stop. Well, so Frank, what's going to control your variable trailing stop? What are you using to control this variable trailing stop? I take it you must be using some kind of an indicator that's calculating this variable trailing stop. Let's see. All right, so let's see. Frank is saying when price hits the initial delay. Yeah, I guess really that's that is the option that is available here. So okay, so you could set your stop loss to some indicator value. So the initial delay, instead of using a 20 tick, we could, let's say we set a initial placement. We could use the SuperTrend, to, let's set that to 0. So there we go. So no offset. So let's just say we set our stop loss to wherever the anaSuperTrend is. So that's the initial placement. And then the trailing action, you just have to, so there's two options here that you can use, guys. So you can use the initial delay to wait for so many ticks in profit or so many points in profit. You could say wait so many points in profit. The others are basically time-based kind of things. So if you need some kind of custom event to move that stop loss, into a profitable stop loss, then instead of using an initial delay, you could use a trigger. And you could use a bloodhound signal. You could, yeah, I can't think of any examples, but maybe you could generate some bloodhound logic that says, let's move my profit target, let's move my profit target to break even or plus 5 ticks. Let's see, or maybe you have some kind of an indicator, some kind of custom indicator, that's telling you, let's move, you have a custom indicator that says, move your stop loss, to break even plus 5 ticks, something like that. So there's kind of there's two options there to use some kind of a variable, decision-making option for moving your stop loss. Or you could say if price, moves above some kind of indicator value, so you can compare price to a indicator. So if price is above or below an indicator, this price versus indicator is kind of similar to Bloodhound's comparison solver, but just not nearly as sophisticated, right? So if you want price versus an indicator, you got some simple options here. If you want anything more sophisticated, then you could use Bloodhound instead to do that. So also trigger on, we have profit or loss. So this profit or loss trigger is doing the same thing as the initial delay, but in this case you can actually put in a dollar amount, so you could say after $10 in profit, whatever, or after $100 in profit, after $100 in profit, then move to break even plus 5 ticks, something like that. So there's a couple of options there for you. Okay, let's see what I got on the board here. And okay, so the follow-up would be, so instead of just protecting the profits, it becomes a trailing stop. All right, so we want a new trailing stop with a different value than was the original. Okay, than the initial, I guess. All right, so let's just, let's kind of go back to something that's a little simpler to understand here. All right, so let's set a 20 tick stop loss. So we just have a fixed 20 tick stop loss. That's our initial placement. And then in the trailing actions, we'll wait for, let's see, what would it be? So we're doing oil. Okay, so oil, we'll wait for $100 in profit. All right, so that'll be 10 ticks on oil. And that will just move us to a break even plus 5 ticks, right? So that's going to be the entry price plus 5 ticks. And then we want to rule B. Then we want to turn this into a trailing. So let's just kind of set this up the same here. All right, so after $100 in profits, we're going to move our stop loss. Okay, so we're going to base it off of the current market price, which is the last. And then let's say we want to turn it into just a 10 tick trailing stop loss. So we'll tighten up that stop loss from 20 ticks to say 10 ticks. All right. Or if you wanted to get fancier, you could use a indicator. Let's see. Let's go back to price. We're going to use off of the last, instead of using just a fixed 10 ticks here. Let's set our offset to 0, and instead, let's use the ATR. So we could, once again, we could go back and use the ATR again to calculate our offset. So we'll do a 2 ATR offset. So I'm doing a 14 period ATR, something like that. So there we go, right? Oh, and the repeat. So if we want this to be a trailing 2 ATR, we need to set our repeat, right? So let's set our repeat to indefinitely. And we could have our trailing stop move once per bar, once the bar closes. Or if we want to move in real time, we can look at ticks in direction. And so our stop loss would be moving every tick in direction. Right? Or we could say, wait for every 2 ticks in direction. Right? So we have to make 2 ticks in profit. Every 2 ticks in profit, then our stop loss gets updated. So we'll do something a little fancier like that. So we're going to repeat. So rule B, we're going to repeat. And actually, let's call this here 2 ATR trail, right? So this is a 2 ATR trail. So this one will actually be doing the trailing because it's repeating, right? So if your repeat is set to none, and keep in mind here, so you notice how my orders just flipped around. That's because they're sorted by name. So when I changed the name, it changed the order here. So our protect profits trailing rule, it doesn't repeat, right? We have it set to no repeat, so it's only gonna act one time. It's only gonna trigger one time. But our 2 ATR trailing rule, that's going to repeat indefinitely. So that actually becomes a trailing rule. That actually becomes a trailing action, so to speak. Right. So let's click OK. And let's close this out. And let's go along. So let's move this up here. And let's set our display here in dollar amounts. So there we go. We got $50 and $70 in profits. So once we hit $100, our stop loss will move up. And I'm gonna lock the chart here so the chart doesn't move on us. And bingo, there we go. So our stop loss just moved up to break even +5. And then once price gets more than 2 ATRs away, plus, remember, it's moving every 2 ticks. So every 2 ticks in profit, our stop loss will begin to ratchet up. All right, so this repeat every 2 ticks. You know, you have that same functionality in NinjaTrader's ATM strategy as well. And there we go. It just moved up again and again. So, all right. See, Frank is asking, given that the ATR is a non-directional. Yeah, the ATR is a non-directional indicator. It's just a measure of volatility. How can the plus minus DI be used instead? So that would be for the DM indicator, I guess. Yeah. All right. Well, let's see here. I'm not sure. Let's get the DM indicator on here. All right, 14 period. Let's see. And we change my colors so we can see them a little better. Well, you know, the DM indicator gives pretty big values. I'm not sure how that could be used. So, yeah, so Frank, if you could come up with some kind of formula for using the DI plus and DI minus, you know, maybe, yeah, then maybe I could come up, you know, then maybe I could show you how to use some kind of a multiplying factor within BlackBird. So, you know, we just kind of go over again here. We'll just set up another order set here. So, you know, if you want to use an indicator, so let's just look at the parabolic SAR here. I'm just going to replace the parabolic, well, actually, let's see. Yeah, if you're using an indicator value, that indicator actually has to set the price value for you, such as the parabolic SAR does. But the DM indicator, let me shrink this up here. So the DM indicator, now it's giving us values that are totally unrelated to price. So we could use that as a offset. So actually, let me go back to price. So as an entry price, it looks like the DI plus and DI minus could be used as a offset factor or an offset multiplier. So something like this and like that, but I'm not sure what kind of a multiplier factor you'd want to use. You'd have to kind of figure that out. Maybe something like 0.5. I'm not sure what that would do. That might be it still might create kind of a crazy offset price. Let's just see what happens here. Let's see. And let's see. Gotta make sure that this is a stop loss. So I need a -5, a -half multiplier or factor. Yeah, I need to set my long factor to a negative value there for a stop loss. All right. And there we go. So, using the DM indicator to set my stop loss way, way down. So, yeah, I don't know. So there you go, Frank. You'd have to kind of figure out what kind of a multiplying factor you'd want to use with the DM indicator there. So Jeff's question is basically, how could you use the anaSuperTrend to set a short stop loss within BlackBird? And actually, you can't. There is no way to do that. So if you're using a indicator to set your order prices, your indicator just has to give you that price in the correct spot. If you're using an indicator such as the anaSuperTrend and it's giving you a long stop loss price, BlackBird is not an indicator to convert your other indicators because they're incorrect. Right? You have to be making sure that you're using an indicator that's giving you the correct stop loss price. So Bloodhound will not convert your custom indicators to give you the correct stop loss price you want. That's not what Bloodhound's about. Basically, you would have to rewrite the anaSuperTrend indicator to work as a generic stop loss offset indicator. So, for example, let's go back to the ATR again. So the ATR is, a non-directional indicator. It's just the ATR is an offset value. So if you wanted to use the anaSuperTrend as a stop loss offset value, so therefore it's universal for longs or shorts, you would just have to rewrite the indicator to tell you this distance here. Right? Basically, my white arrow, you would need to rewrite the anaSuperTrend indicator so that it gives you the distance of this arrow, and then you could use that right, as your stop loss offset. Because remember this, so the ATR, it's giving us a distance, right? It's giving us a distance of 5 cents, 0.05, which is 5 cents, right? Or basically it's 0.05 points. And that's what the ATR is giving us. It's giving us a distance or a delta. So you'd have to rewrite the anaSuperTrend indicator to also give you a delta or a distance, right? You have to write it to give you, this kind of this distance here. Whatever these distances are. So, yeah, right. So, yeah, if you got some kind of a custom indicator that's giving you a stop loss price, but instead of, so basically in Jeff's question, Jeff doesn't want to actually use the price because the price might be on the wrong side, right? So if Jeff wanted to take a short trade around in here, he couldn't because he needs the super trend to be plotting a price value up here. So instead, you'd have to take your custom indicator and rewrite it so that it just gives you this distance, like the ATR gives a distance value. All right. So there's no way to do that in Bloodhound. Bloodhound's not an indicator to do math, to do math problems for you. Bloodhound is just built to build trade signals, not to do mathematical calculations for you. So, yeah. All right. Once again, there's really, guys, there's no way to get around this. Indicators do the core functional work, right? So if you found some indicator that's kind of has something close, but it's not doing the exact calculation that you want, it's not doing the exact function you want, well, you just have to rewrite that indicator so that it is performing the function that you want, or so that the indicator is outputting, the values that you want, right? There are no indicators out there that will kind of transform how another indicator works. So, yeah. So, okay. Let's see what else we got here. Yeah, and so let's see, Jeff's follow-up here. Jeff was wondering if this kind of stop loss offset could be done in Bloodhound, and no, like as I said before, Bloodhound cannot set the price levels, right? Bloodhound only gives you a 1 or a -1, right? Those are not stop loss prices. So once again, Bloodhound is not an indicator to set stop loss or profit target values. It's designed to just give you trade signals. So yeah, even Bloodhound would be the wrong indicator to do that. Okay, so I'm just going to summarize Frank's question here. Okay, so earlier, guys, when I was showing showing what happens when if you're using an indicator for your stop loss. So let me do that again here. Let me set my stop loss up to use the anaSuperTrend. There we go. anaSuperTrend with the 0 offset. All right. So, all right. So we can see that the anaSuperTrend here, it's It's the anaSuperTrend is set up for only long trades. So, all right, now I was demonstrating if I go short, right? So if I use the go short button, right? Basically, BlackBird submits your stop loss to the market, and then the market comes back and says, you know what, your stop loss was in an invalid location, and you just got stopped out immediately. So you can see the trade went on. I'll do it again here. The trade goes on, and then we get stopped out immediately. So Frank is asking, okay, that was a manual trade that I just did. So what happens in fully automated trading? Right? So let's say, you're using some kind of a indicator here to execute trades. And let's see if I actually have, here we go. There we go. All right, so I've got my test signal generator. All right, so let me just set this indicator up here to kind of generate some trade signals. And okay, so this indicator is going to generate some random trade signals here to kind of simulate, an automated situation here. Let's see. Yep. Okay. Looks good. And actually, I guess let me also put that indicator on the chart. Let's see, I had 3 and 5 set up here. Here we go. Okay, so there's the indicator, and we should get another. No, okay. Let me move. I'll move price down. And oh, hold on a moment. Let me make sure I get this set up correctly. Greater than, less than. And let's bring up the control center as well. And so there we go. All right. So if you look at your log tab, and I guess we missed it, but also a little message would have come up right there where it says shark indicators at the bottom left of your price panel. A little message would come up as well, but we can see here that we got a message here. The long CL 5 range trade was ignored because a stop loss, basically, stop loss A, the stop loss anaSuperTrend, and it gives you the price at 50.55 was above the planned entry price of 50.52. Right, so we can see that our stop loss was above the market at 52 cents. Our stop loss is at 55 cents for a long trade. So the trade was just ignored there. Right, and and so BlackBird will basically give you, these messages here if a trade is ignored or, for some reason invalid or something like that. Or say if your money management rules kick in, your money management rules kind of turn off trading for the day, you'll get messages in the log tab telling you, why a trade it'll tell you that a trade, first of all, was ignored, and then it'll tell you why it was ignored. So basically, this is just saying that, order set A, and it So it gives you the order set A, and then the name of the stop loss and the prices. So it kind of gives you all the information you really need to know to understand why a trade was ignored. So, all right. So I hope that answers your question there, Frank. And all right. Okay. Olga's got a good question here. What's the difference between delays and a trigger? So let's pull up BlackBird here. And all right. Here, let me just, well, I guess I'll use the stop loss to explain. All right, so in the trailing actions, what's the difference between the delay and the trigger? Well, a delay is just that. It's a delay. It's some kind of a delay mechanism. So in other words, the trailing rule. Let's see. Let's do this here. So I'm going to set this trigger to none, and I'll use my delay. So, right. So the protective profit trailing rule. This has a delay. So basically, this whole rule gets ignored until the delay is over with. So right now we set our delay to wait for 12 ticks, in profit. In this case, if I wanted to, I could set the delay to say, wait 12 minutes. So once order set A gets executed and our stop loss gets submitted, then the protective profit will have to wait 12 minutes before it can get executed. So after 12 minutes, the action will actually get executed. Right? So this is just a delay factor here. Now, trigger, these are actually events. So these are basically, think of these as kind of like triggering events. So it says trigger on. So this trailing rule could trigger on a bloodhound signal, right? So basically, this trailing rule, it would trigger whenever there's a bloodhound signal. That's when this trailing rule would get activated, right? It's when it would trigger. It would trigger on a bloodhound signal, or you could wait for some kind of an indicator value, So for example, we had the standard deviation indicator up. So, you could say, wait until the standard deviation gets to some kind of a value here. So let's see. Let's find the standard. Okay, so there's our standard deviation. And once again, with an indicator, if I wanted to, I could apply a long factor or short factor, basically a multiplier. So remember, factors are multipliers. But I could say if my standard deviation, if I standard deviation, say, got greater than, I don't know what would be a good value, but I'll just say 0.5, 0.8, for a long signal. or 0.8 for a short signal. So if my standard deviation got really big, that would trigger this trailing rule as well. So, triggers are kind of like, think of them as like logical events, right? Triggers are basically simple logical events, whereas a delay says you have to wait until the delay is over. But then also, once the delay is over, so once this 12 minutes is over, this trailing rule could repeat indefinitely once it's over. But you can see I have my repeat turned off. So if I wanted to, I could say, repeat indefinitely and repeat every bar. So as soon as 12 minutes is over, the action will execute forever because I have my repeat set to indefinitely. So this action is going to repeat indefinitely until the order is closed out. And of course, I have it set to repeat every bar. So whenever a bar closes, this action will repeat. Yeah. Now a trigger, the trailing rule only occurs when the trigger activates. So, or I should say after the trigger activates. Right. So once the trigger activates, the action can take place depending on the repeat. So again, let's set this back up the way I had it. This will make more sense. So all right. So nope, sorry. Oh, yes. Okay. Okay, so going back to this 2 ATR trailing rule, there's no delay, but there is a trigger. So this type of a trigger, as I said before, the profit or loss, that is very similar to a delay, in that we're waiting for $100 in profit. And then once this trigger is triggered, then the action will continue to execute based on what the repeat is set to. So, so right now, once the trigger has occurred, the action will always repeat, based on what I've got set here. So it's going to repeat every 2 ticks, as I showed. Now, if I want, I can place some limitations on that repeat, right? So you notice that we have this checkbox here, only repeat when re-triggered. So if I check that, what that means is that when the trigger event happens, the action will take place, but it will not repeat until we get another trigger. So we have to get a re-trigger event again. So in other words, this trigger event has to occur again before the action can repeat. Right, so that's what this checkbox is for. It kind of sets it sets up some limitations as to how often the action can keep executing. So, I guess kind of a typical use for this only repeat when retriggered. A typical use would be, let's say we're using a bloodhound signal to trigger some kind of a trailing rule. So, but you only want the action to execute only when the bloodhound signal occurs. So probably a typical use would be something like this. So once per bar, check to see if you get a bloodhound signal, then you perform the action. So the action performs when you get a bloodhound signal, and that's when the repeat. So it can repeat indefinitely, but only when you get a bloodhound signal, because we have this only repeat when retriggered. So you have to get a bloodhound signal to re-trigger the trigger on, and then the action can occur. All right. So you can see there's a lot of flexibility in here. So, all right, I think I hope that covers it. I kind of went beyond the delay and trigger, but I hope that helps. All right, so I think, okay, so Frank's kind of going back to his previous question about using a stop loss here. So let's let me set this stop loss back up the way we had it. All right, so we had something like a 20 tick stop loss, and then we had these trailing rules. So let me get them set back up again. Okay, so all right, so Frank is expanding upon this stop loss here. And so in Frank's question, he would have a profit target. So let's set some kind of a huge profit target, like so. All right, so we got a 50 tick profit target, a 20 tick stop loss, and our stop loss is going to trail. And let me get rid of the signals here. All right, so we got something going here, and so let's go long. All right, so the key to Frank's question is so we got a trailing stop loss thing. So he's asking how would that be coupled with something that allows the profits to run above the profit target. Yeah, so obviously you can't have profits running above your profit target. And so he's asking later on, how would you move the profit target? How would you keep moving the profit target? So you could keep your trailing stop loss going. So really the key is key to Frank's question is, how would you move this profit target? How could you keep inching up this profit target? All right. So, well, basically, let's take a look here. You can see profit targets have trailing actions as well. So you could go in here and set up a custom trailing rule, right? And then just find, some kind of a logic that you want to use to determine, when, how, where, and how much you want to move your profit target. So you can set up trailing rules that will move your profit targets, either away from price, or they could pull your profit target in towards price, right? Same thing happens with a entry order, right? If we go to market, a market order can't have any kind of trailing action because a market order gets filled instantaneously. But a limit order, you can see a limit order does have trailing rules. So you can also set trailing rules for a limit order as well. So you could keep moving your entry order up and up and up, and to wait for price to pick you up, right? So I guess for say like a I don't know, just something real simple for a limit order, we could set our limit order to like the SMA 14, right? SMA 14, we'll set it to that moving average, and then we could set up a trailing rule that moves our limit order to the SMA 14, right? So there we go. So we're going to keep moving our limit order to the SMA 14, and we're going to keep repeating this, indefinitely until that order gets picked up. So, so there's an example of like moving your limit order, your limit entry order, so to speak, right? Like that. If we wanted to, we could say, cancel after 10 bars, well, maybe something a little more reasonable, like cancel this limit order after 7 bars if price never picks up your limit order. But, getting back to Frank's kind of moving a profit target, Frank, if you got some kind of example, I could put something in here, but you can see that, we could move our profit target, to whatever you can come up with. If you want, you could use an indicator value. I'm not sure how you would determine how to move your profit target, but that can be done. So, all right, guys, with that, I'll say, hey, have a good one. All right, bye-bye, guys.